Good afternoon, Mr. Patrick. My name is Mary Gracelta Abigail Sipayung with name 0022411058. Here, I will be presenting the journal article that I have reviewed, titled Accounting Equations in Business Transactions by Almira Kumala Ulfa. Without further ado, let me begin. First is the abstract analysis. This section analyzes the background, objectives, method, results, and conclusions contained in the abstract. 1. Starting with the background, it is explained that the accounting equations forms the foundations of accounting records by ensuring that debit and credit entries are balanced. This is stated in the abstract. In the sentence, the accounting equations is the basis for understanding accounting records that use paired records so that the amount of debit is always balanced with credit and can know where the positions of assets, debt positions, and capital positions in each transactions. Next is the objective, which is to comprehensively analyze the role of the accounting equations in business transactions. This is stated in the sentence. The study intends to analyze comprehensively about accounting equations in business transactions. Next is method, which is a descriptive approach that explains the concept and applications of the accounting equations. Although not explicitly stating method, the descriptive presentations of the concept in the abstract indicates a theoretical and analysis approach. Next is the result, which is this shows that the accounting equations does not only help maintain the balance between assets, liabilities, and equities. This can be found in the sentence, the accounting equations does not only record transactions that are directly related to assets, debt, and capital. The accounting equations can also be used to see the effect of income, expenditure, expense, and transaction. Unless the conclusions, which is the study concludes that understanding the basic accounting equations is crucial for preparing accurate financial statements, emphasizing its role as a fundamental concept in accounting. This is mentioned in the sentence. Therefore, before making financial statement, we must first have to understand the basic concept of accounting, the accounting equations. The basic equations in accounting is a basic concept in making financial statements. Okay, the second part I'll explain is the introductions. 1. Topic or issue and subject matter. The accounting equations as the foundation of recording and financial reporting. 2. Reason. The importance of accounting in providing accurate financial information for decision makers. 3. Thesis statement. The accounting equation is a fundamental concept used to analyze and record business transactions in a balanced manner. 4. Literature review. References to accounting theories and literature such as Wagan et al. Supporting the concept of the accounting equations. Next, the third section is method. A. Research design. Based on the preliminary analysis and abstract, this research tends to use a qualitative research design with a conceptual or literature review approach. The author does not conduct direct empirical data collections, but rather explains the concept of the accounting equations based on references and logic. B. Material or data source. Data is drawn from accounting literature, textbooks, and academic references that discuss the accounting equations. References such as Wagan, J.J. Kimmel, P.D., and Kieso, D.E. 2010, and Kartomo and Lasudharman 2019 indicate the literature sources used. C. Procedure. The data collection procedure in this research is through a literature review. The author gathers information from various relevant literature sources on the topic of the accounting equations. Data interpretation is carried out by analyzing and synthesizing the information obtained from the literature to explain the concept, component, forms, functions, and applications of the accounting equations in business transactions. Next, the fourth section is data. The data in this journal is implicit and conceptual. There is no primary data in the form of numbers, survey results, or statistical data presented. The existing data consists of accounting concept, definitions, and explanations taken from the literature. Next, the fifth section is finding results. The finding results of this research are the comprehensive presentations and explanations of the accounting equations, including 1. The definitions of the accounting equations as the balance between assets, liabilities, and equities. 2. The components of the accounting equations, assets, liabilities, equities, along with examples. 3. Various forms of the basic accounting equations. Assets are equal to equity. Assets are equal to liabilities plus equity. Assets are equal to liabilities plus equity plus revenue minus expense. 4. The functions of the accounting equation in understanding changes in the company's wealth and the asset use. 5. The accounting of the applications of the accounting equation in business transactions, including in financial statement, bookkeeping, profit calculations, and investment. Now, I will explain the point contained in the finding results. 1. The accounting equations. The accounting equations shows the balance between a company's asset, liabilities, and equities. Assets are equal to liabilities plus equities. Assets, the normal balance is debit. Liabilities, the normal balance is credit. Equity, the normal balance is credit. This equation is the core principle of double entry bookkeeping. It ensures that for every debit, there is a corresponding credit. 2. Components of the accounting equations. There are 3 components in accounting, which is asset, liabilities, and equities. Assets is resources owned or controlled by the company. Example, cash, account receivable, and buildings. Liabilities is obligations of the company to external parties. Example, like accounts payable and loans. Equity is the owner's stake in the company's asset after deducting liabilities. Examples, owner's capital and retained earnings. 3. Various forms of the basic accounting equations. Standard form is assets are equals to liabilities plus equity. Extended form, assets are equal to debt plus capital plus income minus expense. 4. Functions of the accounting equations. 1. Basis for all bookkeeping and financial record keeping. 2. Helps in tracking changes in financial positions. 3. Provides a framework for preparing financial statement. 5. Essential for verifying balance entries, debit and credit. 5. Applications in recording every business transactions. 1. Financial statement preparations. 2. Bookkeeping and profit calculations. 3. Investment analysis. 4. Emphasizes the continuous balance maintained across transactions. Next, the sixth topic, which is discussion. The discussion section in this journal is spread throughout the discussion sections. The main discussion revolves around 1. Emphasis that the accounting equations is a basic concept and the foundations of the entire accounting system. 2. Explanations of how every business transactions affects the elements in the accounting equations and maintains its balance. 3. The importance of understanding the accounting equations before preparing financial statements. 4. The practical applications of the accounting equations in various aspects of business. Now let's discuss the example problems. During November 2023, Company A, which is engaged in services, record the following transactions. On November 1, the owner deposit money worth 12 millions and equipment worth 3 millions. On November 10, the company paid accounts payable worth 2 millions. On November 25, the company earned service revenue of 5 millions in cash. Explain the changes in the basic accounting equations in tabular form. Okay, on November 1, the company owner invested cash into the business. In the journal, we record an increase in cash of 2 millions in the asset sections, as cash is part of assets. In addition to cash, the owner also contribute equipment. Therefore, we record increase in equipment of 3 millions in the asset sections, since equipment is also part of assets. Thus, with this cash and equipment, the company has capital amounting to 15 millions, which is the sum of cash and equipment. On November 10, the company repaid a debt. We record a decrease in cash of 2 millions and decrease in liabilities of 2 millions. Why are cash and liabilities recorded as negative? Because when the company repays a debt, its cash decreases, and since the debt is paid, the liabilities also decreases. On November 25, the company earned revenue in cash. We record an increase in cash of 5 millions in the assets column and an increase in revenue in the equity column. Now let's sum it up. In the asset column, 12 millions plus 3 millions minus 2 millions plus 5 millions equals 18 millions. In the liabilities columns, a decrease of 2 millions. In the equity column, 15 millions plus 5 millions equals 20 millions. According to the equations, assets are equals to liabilities plus equities. The liabilities of negative 2 millions added to the equity of 20 millions equal 18 millions. Thus, the result is balanced. Assets are 18 millions and liabilities plus equities also total 18 millions. Next, the 7 sections or the last part is the conclusions. The conclusion section is in part C kesimpulan and summarizes the main points of the research. 2. The definitions of the accounting equations as the balance between assets and liabilities plus equities. 3. Reaffirmations that the accounting equations is the foundations of the entire accounting system. 4. The funding sources for company assets come from debt or equity. 5. The applications of the accounting equations in various aspects of business transactions, financial statement, bookkeeping, profit calculations, and investment. Well, that's all from me. I hope Mr. Patrick can understand what I have explained today. I apologize if there are any wrong words in the delivery of this material. Thank you.